Good morning and welcome to the market forecast. Today is Friday. Happy Friday, everyone. June the 4th. My name is John Hoagland. As always, thanks for trusting me with your time. As always, we're going to be looking for accurate context, good risk management, and patience. I almost feel like this morning I should start the forecast with the deep breath. I'm going to do so because we've got some markets moving, new information, lots going on. I got to remember to stay calm, cool, and patient, as always. 7:30 this morning, the unemployment numbers did come out. The prior was 6.1%. The forecast was 5.9%. It came out at 5.8%. We're still waiting for factory orders to come out in about an hour at 9 o'clock Central this morning. Stocks were largely sharply unchanged, steady to mixed this morning before the NFP and the unemployment numbers came out. Nice knee jerk to the upside in almost all of the markets that we look at. The NFP, the non farm payrolls, missed the mark a little bit. We're going to take a look here. Non-farm payrolls, they were looking for 650,000. It came out 559,000. There was an adjustment from last month's, but it was only about 12,000. Also, private non-farm payrolls missed the mark. So some kind of contrary information there. Manufacturing payrolls also missed the mark a little bit. So some kind of conflicting information, but I'm sure that most are focusing on that 5.8% unemployment rate. So again, stocks on the upside, crude on the upside, currencies on the upside. Big knee jerk reaction in the 10-year. It almost looks like it's an anomaly or something was wrong with the chart. We're going to see that shortly. AMC, the Reddit fans' new favorite, volatility continues, was down 18% yesterday after they announced and actually rang in 600 million in equity. Looks like about 6% lower this morning so far. But hey, you may as well strike while the iron is hot, right? Crude oil prices maintained value after a 5.1 million barrel draw in inventories yesterday. Pent up demand seen supporting prices. More people in the job market also perhaps supporting prices. We've left the opening range at the low, and we are currently trading, right at or above this week's high. We've had a pretty decent move to the upside in crude over the past few days, and perhaps a couple of signals of a potential weakness in structure. It's going to be really important for this market to accept above yesterday's high, which was the weekly high. Seems to be doing so far. As always, make sure you smash the like button. Share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. Taking a brief look a couple of minutes ago at the VIX, down about 4%, 1718. Dollar index down slightly, still above that 90 level at 90.25, and the 10-year yield, a little bit of a boost in the 10-year yield up at 1.62. Nothing all that impressive. Always got to say good morning to everybody. Good morning, Brian. First one in the room. You win the prize. Theo, good morning. Murph, good morning. You're going to take the day off. Why not? You had a good week. There can be opportunities today, but, with the new information, it may be one of those days where if we start to get a little impatient and maybe we, don't start off that well, maybe one of those days you want to take off. Why not? You had a 3-day weekend last weekend. Why not go for a 3-day weekend this weekend as well? Richie, good morning. Bill Phillips, good morning. Caesar, my brother Rick, good morning. Love you. Charles March, the chef, Mr. Magallanes is here. John Doherty, JD, good to see you. Vince, always good to see you. Tim, PK, good morning. Norman, good to see you this morning. Vici, Deanna, Tone, Andres, Jason Cargill, Jim Wolf, Greg, morning all. Started combine today. Just say no to resets. Absolutely. Take your time, Greg. There's no rush. If you can just grind your way to the profit target and grind your way to a funded account and grind your way to increasing numbers in that funded account. That's what you're looking to do. Doing so buys you time to get better and better at what you're doing here. Joshua, Mr. Shine's Mystery Channel, good to see you. Colin, James, good morning. Jorg, good morning to everybody. Subconscious, Rob T, good morning. Nicholas, good to see you. Ryan, Jerry is awake. I hope so. Hope so. Markets are moving. Mr. Shine's Mystery Channel. Good luck, Greg. Absolutely. So we've got a lot going on. I'm gonna go right into the charts here and just take a look at what's been going on here this morning. This is the daily in crude as usual. We usually start with that, just going from left to right. The market really starting to move. A notable open increase in crude oil over the last 2 weeks. We've really been piling in open interest and in a directional market. So that's going to kind of present itself as healthy. Okay, more money coming in, more open interest, more people coming in, more new business coming in. That's healthy for the upside auction. However, not however, including that positive information, we've seen cumulative delta consistently more and more negative. So that means that we keep getting shorter time frame traders short, and then they run it up. We keep getting short time frame traders short, and they run it up. It's an indication of potential longer time frame participation in the marketplace in the long side. With the open interest increase, with the cumulative delta consistently negative, that's what that tells me. So the upside auction is strong in the S&Ps. The internals are strong. I've got a little bit of a question of momentum. We have new information this morning. More people working, more demand. Okay, this is new information into the marketplace. Take a look at the 30-minute chart here. Settlement 68.81. Put that on your charts. Before the number, there was no real discernible overnight inventory. Numbers came out. It's pushed us to our weekly high. Our weekly high was the overnight night before last. This is going to be an important level for me today. If we can't hold above that, there are a couple things that might be indicating that the downside auctions have not been finishing this week. We've got a kind of a weak low here. We've got a kind of a weak low here. There's no evidence of excess on these lows, unfinished downside auctions. New information. Okay, if we can hold above this level and we can continue this momentum to the upside. Some folks are having trouble getting video. The stream looks strong, so hopefully that's Jay Gilmo suggesting refreshing your browser. Hopefully you're going to get in there, Charles. So we've left the opening range at the low of the session this morning. Okay, that's one of the first signs of buyer control right off the open. I do not want to fight this move to the upside without some sort of structure, without something to lean on. If the market starts to show momentum falling off to the upside, there may be a move in the opposite direction. And again, if we reject above this week's high, that might be our opportunity to see the market come off a little bit. It's Friday. It's not a holiday weekend, but when looking at the daily chart, we've gone a long way in a short period of time. Sounds like the theme song to Smokey and the Bandit. We got a long way to go and a short time to get there. We've come a long way. New information can bring new business into the marketplace. That is what we're seeing right now, is new business into the marketplace, putting us in new highs, opening range to the low of the session. Don't fight it. Rejection above this week's high, this weekly high right here. Where is that? In 69.40 could cause some trouble for longs. We may see some long liquidation. It seems almost due, but I don't want to pick the top. I want to look for a good opportunity. All right? So yeah, it's Vince. It is showing some pretty good energy with that opening range to low of the day. Not going to fight it until I find some really good reason to, and in a cheap way. S&Ps. Let's expand this so we can all see what we're looking at. So yesterday I had a pretty deep dive down below our current area of balance, but that was pretty swiftly rejected. We've got 2 weeks really of going nowhere, and it is rollover. Next Friday we'll be trading the September contract. Rollover will be on Thursday. It'll take that day to move most of the volume over to the September contract, which we will be starting to trade a week from today. We'll keep an eye on that. It's never a finite date or time when that happens, but we'll talk more about that in the forecasts next week. So we never really did get a good test of last week's low. We got a test below our balance area. We're back in the balance area. If we really start to get some legs, we're gonna have the opportunity to see this target-rich area here that was rejected and rejected and rejected and rejected, and the more often we revisit that, when are we going to start to exhaust the sellers that are up there? We lost 4,700 in open interest yesterday. Probably some people evening up for non-farm payrolls and unemployment today. But there's no real, you can't see if it's longs or shorts or whatever it was because we're still range bound here. Not only that, the fact that we're in rollover does blur the information that open interest and volume can bring to us. It's rollover, unemployment. Take a look at the 30-minute chart. See what we're looking at on the open here. So kind of similar, really no overnight inventory. We hardly left the value area from yesterday before the number came out. Unemployment obviously is being digested as a positive initially. We're going to look for some decent opportunities. There's some fish up here, ladies and gentlemen. If we can get to weekly kickoff high or last week's high, this whole area up here is a target-rich environment. Looks like now we've set up to open with a gap. If we can't close the gap, then we'll probably continue. We'll look for the market to get up to this level, which has been previously rejected. If you remember yesterday, rejected, 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 rejected. Reminded me of when I was dating. We may get another opportunity up there. So this unemployment number has created a potential gap. Can't close the gap, I'll look for the market to come up and test weekly kickoff high. This is our weekly high up here. This is a big zone up here. There's fish here. It might be tough to catch them. Might be choppy and hard to catch. Third, we got the NASDAQ now. NASDAQ is presenting as a little weaker. It has been. We're a lot further from our all-time high. We've got a very similar area of balance here, but we closed outside that area of balance yesterday. We are back testing the low area of that balance area. We lost 1,900 in open interest. Would you say that those might be longs? Again, it's rollover. It's going to be difficult to discern which side liquidated those positions or was more aggressive in liquidating those positions. If you look at direction, it was long liquidation. But again, volume and open interest is always blurry during rollover. The knee jerk, the market has remained in range. Look at the 30-minute. Finally, we may be getting to an area where we may actually open this with some kind of a gap, which gives us opportunity. If we can't close the gap, we know that we're going to trade in the direction of the gap, which would have us looking higher. We've got plenty of targets, visual things up above to look for. We've got point of control up here, and we've got last week's high right up here. So there's plenty of things to look for. As far as continuation to the upside, this previous weekly kickoff level, supportive initially, really showing some rejection. If we get the opportunity down there, there might be some decent opportunities there. Are we getting a little bit long in short time frame because of this move away from settlement? It was an hour before we open when that number came out. If this is shorter time frame traders, if they can't find buyers to continue to move to the upside, new business, we may get a nice opportunity to look for a cheaper opportunity for a long. Again, watch the gap. We used to say all the time, mind the gap. If you're like in London and you're getting on the train, there's recordings that say, mind the gap. We'll always mind the gap. Gold. All right. Nice pullback yesterday. High volume. Lost 3,300 in open interest. Long liquidation. Profit taking. Profit taking hit the gold market yesterday. We are our initial upside structure has broken. We closed below weekly kickoff low. Have we accepted? Well, a close below it would mark acceptance. Last week's low here. Now we've got new information. The market is coming back into the upside structure. It hasn't made it yet, but it's working on it. Volume to the downside, pretty strong yesterday. 30-minute chart. So here's the move down yesterday. A B-shaped profile indicates long liquidation. So there's more support to the idea that the loss in open interest was long liquidation. Maybe we got a little bit too long up here. We got some people getting out of some losing positions. When you look at the daily chart, we've got a pretty decent move to the upside. It would make sense that at some point, some folks are going to take some money off the table, especially before an important number. We've got settlement right here, 1873.30, the knee jerk to the upside, but we're still in range, so we did not create a gap. Basically, I think we started the day with the opening range at the high of the session. When the number came out, we had the knee jerk to the upside, which is still maintaining structure. It's starting to one time frame, and as long as it one time frames higher, I don't want to fight it. I've got a question here from Ryan. Hey John, sorry to interrupt midway. He's asking what I'm referring about when I'm talking about the gap. I'm going to go back to the S&Ps here for just a second, folks. Okay, when you look at these charts, these volume profiles here are kind of encapsulating the regular trading hours. In the S&Ps, that's 8:30 till 3:15, 3:30, 3 o'clock, whichever you prefer. So now we're in a situation where all of our overnight was in range and in value. New information has come into the business that is going to create an opening that's outside of yesterday's regular trading hour session range. That creates the gap. Regular trading hour to regular trading hour changes. Here's a range. Here's a gap open that didn't close relatively early, so the move was to the downside. Now, I realize this was Monday. I could probably find better explanations. But when we open outside of the previous day's range and can't come back and close the gap, the probability is that we're going to want to try and trade in the direction of the gap. So this morning, when the S&Ps open, if we can't close the gap relatively early, Ryan, we may just see the market continue to bring in more and more buyers for a potential test of weekly kickoff high or last week's high, or even this week's high. So it's it's a subjective thing. We say if we can't close the gap relatively early, we trade in the direction of the gap, which would have us looking for longs and continuation to the upside. Okay? So it's regular trading hour opening outside of regular trading hour creates the gap and creates the opportunity for us to use the gap rule. If we can't close the gap, only two of three things are going to happen. We're either going to range up here or we're going to go and become directional and continue in that. If we close the gap and reaccept inside value from the previous session, sometimes that'll bring the market back into value and even a move all the way to the other extreme of value. So keep your eyes on the gap, Ryan. Okay. I think we finished with gold. Again, no gap, but this important inflection level might be an interesting spot for us to look for an opportunity, because it feels like right now we haven't really attracted new business. We're still in the range from yesterday. We've rejected yesterday's area of value. If we can hold above this weekly kickoff level, I'll look for continuation. Not really looking for any selling opportunities until we can cease one-time framing higher. The euro, wow. So somewhat similar to gold, of course, they usually are. We had a pretty good break of upside structure yesterday. Took us down below the previous week's low. We're back above there. There's new information in the marketplace that may bring new participants into the marketplace. We lost 2,500 in open interest. Okay, that indicates possible long liquidation, profit taking from the way up. The weekly kickoff low may be in play if we do head that way. Doesn't look like it's going to. Maybe last week's low might be something that we could look for. The 30-minute, what a big knee jerk to the upside. No real overnight information. It closed with a gap, Ryan. It closed with the gap. Closed it really early with the knee jerk from the unemployment numbers, and now we've started to continue to one-time frame to the upside. I don't want to fight this. I'm going to try and stay really patient. What I really don't want to do is, if I've had a decent week, I don't want to ruin that today. Of course, we never want to do that. So I'm going to try and stay patient today. That's why I kind of started the forecast here with the deep breath, because I think it's important to, we're all looking at these opportunities that we view as big opportunities, but if we just jump into them, sometimes that's not the best idea. We've got to have a plan. Always trade the plan. Process is everything. Good process equals profits, and profits are byproducts of a good plan. So I'm going to try and stay patient today and really find something that I can perhaps dig my teeth into, if that makes sense. The 10-year. It's been a kind of a blah market. We had a pretty decent downside move yesterday. We a little bit of an uptick in rates today. I think we're getting closer to something I can use for an opportunity in longer time frame. But by and by, we're pretty range bound here. I was hoping that the weekly kickoff low or the last week's low would be in play today. It is not. The rip to the upside on the 30-minute chart here. I mean, it came out, it ripped all the way up here and then all the way back, and then buyers came in and have been bringing the price higher over time. So the no gap, no position, new information takes us out of yesterday's gap. Lots to look at up here. Again, this is going to be a little bit confusing when there's new information that jerks the market one way or the other. it tends to, I know it tends to strip my gears, and it tells me that, okay, there's a change, and until I get my mind wrapped around the change that has just occurred in the marketplace, I gotta stay calm. I gotta say, okay, wait a minute, something has changed. What has changed? What can I do to always do something that I believe is in my best interest? I don't want to FOMO into any trades. I don't want I just kind of want to let this settle today and then look for opportunities as the day goes on. It was probably pretty easy to get lucky today on a big move if you just hit the right button. It's probably pretty easy to get whacked today on a big move on that number this morning also. I'm not playing the numbers. I've taken some positions into some pretty important numbers, and I've had some really great days, and I've had some horrible days. If I add them all up, I'm about even. The only thing it's done is to create more gray hair. So stay patient today. Stay cool. It's Friday. Make a little bit of money this morning. Nothing wrong with taking the afternoon off, and enjoying the weekend. So on that note, I'm going to take my second deep breath of the market forecast. Stay calm, cool, collected. Stay grateful. Stay humble. Stay creative. Make some money today. Have a great weekend. Rest up. Say a prayer for world peace. Be good to yourself. Be good to each other. And we'll see you Monday morning on the market forecast. Now, that said, be patient. Be like a lion in the weeds waiting for a gazelle to get a little bit too close and then go eat. Have a great trading day. Trade well. We'll see you Monday.